Let's talk about the California wildfires, and our hearts go out to those impacted by them. Join us this week as we talk about the lessons retirees across the country can learn from these natural disasters and how to prepare oneself financially from these once-in-a-lifetime crises.
Welcome to Leibel on Fire with Leibel Sternbach, the financial independence and retirement show dedicated to helping you build the life of your dreams as fast as possible with as little stress as possible. Ladies and gentlemen, it's time for Leibel on Fire.
Hi, everyone, and welcome to this episode of Leibel on Fire. I'm Freddie Bell, and with me is Leibel Sternbach. He's Amazon's best-selling author of the book entitled Living with Financial Anxiety, and also the title of the book called Authenticity. Leibel, hello, and welcome back.
Hey, how are you doing today?
Unbelievable. Glad to be talking with you. And as our intro talked about earlier, I'm really concerned about the families, the lives lost, and the count still going up with the number of lives lost in that area. But I'm also heartened by the relief efforts going on. And I'm wondering, Leibel, many retirees are finding out too late that they're underinsured, and we're getting a lot of information about the insurance companies out there. Can you break down the specific gaps that we're seeing in homeowners' policies, especially around national disasters and inflation?
Yeah, so it's really terrible. I mean, our hearts go out to everybody affected by it, and any kind of disaster, right? Whether it's a basement getting flooded or it's something that affects a large community, right? All of those things are devastating, and they're traumas, right? That are really up there. They're really up there in the ranking of things that really affect you, and when it affects an entire community, it's even harder. In terms of, the things that, we see kind of gaps in coverage, and, it really is, you kind of got to take a step back and think about insurance as a whole. And insurance is the basic concept of it is we're going to have a whole bunch of people pay money so that if any one person gets hurt, we're going to be able to make them whole. And the entire premise of insurance only works if it's a small number of people who need to be made whole. And fundamentally, when you have a natural disaster, right, now whether it's people to blame for that natural disaster or not, but when you have a large community of people who are affected by the same disaster at the same time, all of a sudden the fundamental premise of insurance stops working. Because insurance isn't designed to help an entire city rebuild. It's not even really designed to help thousands of people be made whole. It's designed for an individual to be made whole. And that is something that is fundamentally an issue right now, is that with natural disasters, if you look at most of your policies, they exclude them. They exclude anything that affects a large number of people at the same time. And if you want to get coverage that covers those type of events, you have to go out usually to a state-sponsored insurance or federally sponsored insurance, where the government, who now has a huge tax base, can afford to pay and make people whole. But, as we know, the federal government and the state governments are not really very good about the individual.
That's really sad to hear. And I'm just wondering, you mentioned the types of policies and the exclusions. Can you place a rider onto your insurance policy that does cover natural disasters?
So some policies will allow you to insure certain types of disasters, but if you look in the fine print, there is always going to be exclusions. And there has to be exclusions because insurance mathematically doesn't work if a large number of people have to be covered. And so what you end up having is either, limited coverage, or you have, events that get excluded from coverage, or you have to go seek secondary insurance, where you're now having to go to another marketplace. So yes, you can get riders to cover it. Generally speaking, if you just have a plain vanilla insurance policy, it's not going to cover natural disasters. It's not going to cover flooding that's caused by, a hurricane, or from, the ocean backing up, or, from tornadoes, or from fires. or whatever it is that is the natural disaster that happens in your area, which leads to a whole nother problem is, we've got global climate change, right? Whether, it's caused by warming or cooling or it's whatever. The fact is we have these, once in a lifetime storms that keep happening on a very repeated basis, right? I mean, I saw someone talking about, just California, 2017 was the last time they had one of these once in a century firestorms. And we have another one, right? And we're not even 10 years later. So the real question becomes, right, when you have these extreme events happening on a repeated basis and they're happening more and more frequently with more and more severity, how do you protect yourself, right? And when you look at your insurance policies, do you have coverage for those types of events? Like where I live personally, I'm 10 miles, I'm less than 5 miles from the ocean. No homeowner's policy covers flooding. We don't have flood insurance, but we're also not covered by federal flood insurance. So if a really bad hurricane comes, everyone in my area is kind of out of luck because we can't get the coverage we need. Nobody offers it.
Interesting. So with that as a backdrop, Leibel, what happens now? These people's homes were destroyed. There's no two ways about it. What should they be doing now, and how can they position themselves as best as possible?
So the first thing that you want to do, right? First, make sure that you're safe, right? And your loved ones are safe. That's always number one. Number two is the next thing that you have to do, right? And the thing that most insurance companies can deny coverage for is if you do not take steps to mitigate the damage, right? So if there was something that you could have done that you didn't do that could have stopped the damage. So let's say, I don't know the particulars of fire because fire isn't something that happens in any of the places that I've lived, but with, let's say with flooding, right? If you see that your basement is flooding, you need to take steps to prevent that flooding. You need to take steps to prevent it from damaging your home. And if you don't take those steps, the insurance company can come back and say, well, you had an opportunity to prevent damage, you didn't, and so therefore we're not going to pay out, coverage. Now, what are those steps that you have to take? That may be as simple as just calling your insurance company, and they have contractors who will come out and deal with whatever is happening. But you got to call up your insurance company and find out what are the steps you have to take in order to be covered. So that's number one, right? Stop the damage from getting worse, right?
Right.
Step number two is, okay, now that you've mitigated further damage, the next question you're going to have is your instinct is going to be, I want to just become whole. I want to go out and I want to replace the things that got damaged. I want to go rent a hotel room and, live in it. And you don't think about, what happens tomorrow, right? You're just thinking about today and survival and how do I take care of myself? But what you need to be thinking about is who is going to be paying for these expenses. Right now, you're paying for them, but you want to make sure that you get reimbursed, right? You want to make sure that whether it is your insurance company, whether it's FEMA, whether it's state emergency management or agency that's going to reimburse people, you want to make sure that you are eligible for reimbursement, right? And in order to be eligible for reimbursement, you need to have receipts. Right? It sounds simple, but it's true. You need to have receipts. And then you also want to make sure that before you buy replacement stuff, that you ideally, and we'll talk about that in a minute, but don't buy replacement stuff, buy the things that you need to survive, right? Because replacement stuff needs to go through the insurance process. If you're replacing a damaged item, do not replace it because that gives the insurance the ability to say, well, you replaced it with something better than you had before, right? And now we're not covering it. What you want to do is just do the things that you need to survive because that is always defensible.
That makes sense. Now, here's something that doesn't make sense. Are there any tax benefits to being in a natural disaster?
So if you are in a federally declared natural disaster area, you actually get some gifts from the IRS, which, is not something that anybody thinks about, is not something that anybody wants, right? We don't want to have to qualify for being in a natural disaster area. However, there are some benefits. One, the losses that the insurance companies do not reimburse us for, we can claim on our tax return. We also have the choice potentially to apply it to previous years. So if we're, in the year that the disaster occurred, we, earned less money because we were out of work, right? And our taxes are low. But the previous year we were in a much higher tax bracket, or we paid more taxes because we earned more money. We could potentially apply those losses that we had this year because of the disaster to a previous tax return, or potentially even to a future one. So there are tax benefits to being in a federally declared disaster area, and you do want to make sure you take advantage of those. Obviously, once you're safe, obviously, once you're in recovery mode, but think about that before you file your taxes of how do I get the most lemonade out of these lemons I've been handed?
Makes a lot of sense. And so beyond the insurance, beyond the disaster funding, what financial buffers or resources are out there, Leibel, that retirees should have in place to handle weeks or even months of disrupted local services?
Yeah. So, the very first thing, right, is you want to make sure that you have financial resources to be able to pay for these expenses. There's going to be a large number of expenses, and these are unexpected expenses. And this is why we have emergency funds, right? This is why we have a certain amount of money in liquid savings that we don't have to worry about what's happening in the market, that we can just go and sell, and we're not going to take a hit on. Because when we start selling those, investments that we have, well, guess what? The market's tanking because of what's happening in the world, because of these natural disasters. The market gets very scared and upset, or other people need their money because they didn't plan properly, and now they're selling at the wrong time and they're being taken advantage of, right? And so it really is putting salt in the wound and adding insult to injury. And so you want to make sure that you have a cash reserve and you have money that's invested, that's earning money, but that if you had to pull it out, you're not going to take a hit on it. You're not going to take a large hit on it, right? Have that emergency fund, have that first bucket of money that you can use. We like to keep, 1 to 2 years, even potentially 3 years of cash reserves available in there, right? And it's designed to help us weather these storms. So that's the biggest thing. The second thing is having credit lines, right? This is where you want to have, whether it's, in the beginning of our life, the easiest thing is to qualify are credit cards, right? Having credit cards so you can just pay for those bills, and it pushes that rock down the road, kicks the can down another 30 days, right? Gives you 30 days to figure out where you're going to pay for things, right? So credit cards are number one. Number two, home equity line of credits, except if your home doesn't have any value, right? That may not be the best solution, which leads me to number three, which is having a security line of credit, right? So not a lot of people get to the point where they have enough money in a brokerage account that they can qualify for a security line of credit. But this is one of those reasons why I am a big advocate for people getting these lines of credit when they can qualify for it. Doesn't cost anything to get it, but when you need it, you will be grateful that you had it. And that gives you that money so you don't have to sell at the wrong time. You don't even have to think about where you're going to get the money to pay these bills, right? Just spend the money and then, you'll have some interest accruing. Don't worry about that, as long as it's not credit card interest at 30%, right? That also is a problem. But that's why you need those emergency funds and those lines of credit that have low interest rates.
We're just about out of time, but I have to ask you, when a retiree is considering where to move with the climate changes and all the rest of it, are there any financial implications to consider when we're choosing to retire and the place where we are retiring?
So I think you definitely need to consider, kind of what is what are the potential catastrophes that can happen in any area, and every area's got them, right? It doesn't matter whether you're in Florida and you've got hurricanes, or you're in Arizona and you're dealing with 120-degree heat that melts your roof, right? Everyone's got something, right? Or even, you could be out in the Midwest and now you're dealing with snow. There are always these potential disasters that can happen, and they can strike anywhere, and they just strike differently depending where you are. So you need to know what they are. You need to have a plan in place, just like we have a plan for our finances. We have an emergency fund. You want to have a plan for what happens when one of these events happen. Where do people go, right? Where are you going to meet up? Who are you going to touch base with? What are the things that you're going to remove from your house the first opportunity that you get, right? Those, birth certificates, social security cards, passports, things like that. What are the things that you need to make sure? Have a plan in place. And your local emergency management agency, every state's got one, every county's got one. Go to their website. They've got great resources for you, and they'll help educate you as to the things to be concerned about in your location.
Sounds great. We got to leave it right there, Leibel. If you'd like more information, go to yields4u. That's yields, the number 4, the letter u.com. And also, that's it for today's episode of Leibel on Fire. And as we said at the outset, our hearts go out to everyone impacted by the California wildfires. If you're in a position to help, we have the links verified relief organizations in our show's notes, and you can go there to access it. And speaking of turbulent times, join us next week when we'll be talking about how we can tackle these wild market swings and what history can teach us about keeping perspective when checking those retirement accounts.
If you would like to see how the Yields for You team can help you get off the Wall Street roller coaster and save you money on taxes so you can live the life of your dreams, book an appointment online at yieldsforyou.com or call 410-914-4894.
Yields for You is a registered investment advisor in the state of New York and only transacts business in states where the firm is properly registered or is excluded or exempted from registration requirements. Registration as an investment advisor is not an endorsement. Information presented on this program is believed to be factual and up to date, but we do not guarantee its accuracy, and it should not be regarded as a complete analysis of the subjects discussed. Discussion should not be construed as an offer to buy or sell or solicitation of any offer to buy or sell the investments mentioned. Annuity guarantees are subject to the claims paying ability of the issuing insurance company. Content should not be viewed as legal or tax advice. Always consult an attorney or tax professional regarding your specific legal or tax situation.